Very good morning to you guys. Sorry the bulletin's so late today. I stayed up late last night watching the indices and the sentiment. I was looking at technicals and stuff like that. So I actually got to bed about 1 o'clock. So apologies for the late bulletin today. The herd have actually added short in quite a big way, and it's really helped push the big picture, more risk on. So if you're short indices, you've got to be careful. I'd recommend only to be buying indices pending that this sell remains green. Okay, we're quite strongly green on that sell. That just tells us the big picture. This is the change over time. This is the big picture, and this is the difference from where we were yesterday. So they are probably trapped short by now, and there's 7 people trying to sell indices versus the 1 person buying. So there's 7 people who might get liquidated. So it's a bit cruel, but that is trading. Technicals are very strong, 84 out of 100, and we can see that Tesla's had a really good week. Very, very strong week. Might be doing a retracement. I'm thinking about the US tech. We have kind of overindulged a little bit this week. So, but I suppose you could think about it. We've got a Biden Xi meeting this week. They've got a summit, and if they talk about the economy, the exchange of goods, and things are left in a very positive way, that's very good for the global economy. So good for the States. It's good for US tech because they rely on a lot of semiconductors and stuff that China can produce for cheap. So it's an important week for risk. So it might be that's the narrative that's pushing the indices higher. And needless to say is that we already are a buy at the big picture, and they've sold it, but we've got also a fundamental risk narrative, whereas this could be pushing price higher. I think we could be having a little retracement though. It's worth noting that the big change from last Thursday was DAX, and they've really sold DAX. Okay, they've gone quite long EJ, and they've gone long dollar Swiss. They've also started to buy oil as well, but DAX is the notable mover. So we had Tuesday the CPI. We got stopped out 3 times, which wasn't much fun, and then we had the PPI, and then we're seeing like a little retracement, which is perfectly normal and something I would expect. Now the thing is, I was saying when we're up here we should be coming down here, and we did. So what I did is I took the trade and stop feature on the robot, and it's now looking for the next setup. So we did okay. We made about 40-50 pips on this move, but I had to intervene on the robot, which is something I don't really want to be doing because it needs to be automated. But what happened is that the fundamentals kicked in so strongly, we rallied regardless of the sentiment, because this really moved because of the risk appetite on the S&P and the Dow and the DAX, and things were really, really pumped. And because of that, the dollar dumped, you see. So it wasn't so much the robot's fault that we got stopped out, is because of the fundamentals push price higher. Okay, so we're now in a much better place to be buying or selling, and you wouldn't really want to be buying up there, for example. That's why I put an X there on the Discord. We got some ticks here. So if we do get a signal today, at least it will trigger in a better place. I was worried about it triggering up here, and I think it would have triggered AU, the Aussie USD, yesterday, and that might have encountered some losses. So we've got to be careful for the next CPI, because we've got tight stops on our robot, and the tight stops don't really work on the CPI days. The volatility is pretty immense. So when we have the next US inflation next month, we'll have to keep a very close eye on it, and if it does go awry, then we'll have to deactivate on CPI days. It was okay NFP, but the CPI is just a bit too roller coaster, and you can see the S&P really, really pumped, and just look at your indices. The VIX really dumped as well. So we'll have to wait and see what happens here. And this is this nicely markets volume thing that I just got on, just a very basic indicator. So it's kind of suggesting that we might revisit the high, or we might revisit that low. That's where the big boys stepped in on the CPI. So that is a potential candidate for a buy. Down here is a big volume node there. So that's the robot. We done okay this week, but it was a little bit tricky on CPI, so we'll have to keep an eye on next CPI. So that's it in the summary, and it's going to be looking actively for the next signal now because the robot's turned on, and that's that. So that's the robot spoken about. And market scope, so we are contained on this range on gold. We've got this 1975, 1955. You know, you want to be looking for a breakout above or below. They are selling it, but now they've gone slightly sideways, so we could just be a little bit sideways chop, and you've got a $20 range to be playing with, so you could scalp it, but no, that's probably going to be a breakout area, and that's going to be a breakout area. You have to remember, if you're looking for longs, the big fish did step in at 2000, and they could do it again, because there might not be the rationale or the justification for a really, really strong gold, because the Israel-Hamas thing is looking like it's contained a little bit, and there's not really, you know, it's not really that sought after as a fundamental, asset class to buy. So it could just be, we could just be a little bit sideways. If anything, you could probably look for sells, really, because you know, if they go long, then we're probably going to break that. Then you could be looking down here for a much better risk to reward to buy down here. We're just chopping a little bit on gold, so they're your levels, 1955, 1975. So it all depends what happens here. So get a copy of the trading station, and you can see, you know, if it's a buy or a sell. DAX, no, not DAX, S&P. Yeah, we're very sideways, and we're a bit close to 80%. Now we look at the Pareto principle in the QDB system. When we go beyond 80%, we're extreme. When we go below 20%, we're extreme. We're basically overbought, oversold on the sentiment, and if we can't really squeeze the bears so much that they completely leave the casino, just because we wouldn't have a market. So we've got a little bit more gas left in the tank, but it's coming up to a squeeze zone for the bears. So we expect a little retracement. Like I said at the very beginning of the video, the US tech has gone a little bit bonkers this week, so we could do a little bit of a taking profit perhaps and a little retracement. So that's that. I will show you DAX now, because we are extreme on DAX. So we're below 20%. So this is basically a bear elimination, liquidation, and so we can't really keep going higher sentimentally because we've exceeded 20%. All right, so sentimentally this should be a top. Technically, fundamentally, perhaps not, but sentimentally we are, because we've exceeded 20%, right? So expect this to change this time tomorrow, and that'll be fairly normal because of this, okay? And the poor bears, oh, it's just pretty horrendous. So they really started selling it here, 600 points later, but really this is the big shift there. That's crazy. US 30. Oh, did it let me select it? US 30 and sideways. So basically it's exactly the same what I was saying about, you know, the Pareto principle. Be careful if we exceed 20%, basically. And that's it. So S&P done, US 30 is done, and gold. So that's the video, and we'll just have to see how we go with the robot today. And we're definitely in a better place to buy or sell now. Yeah, I think the robot might have tried to buy Aussie USD yesterday, but we did deactivate it. Wouldn't have been a good place to buy. But yeah, we're breaking the round number as well. So we'll have to wait and see. And also don't forget, we're still testing as well, because we don't really know how it reacts to like big risk events like the CPI and stuff. So remember to be testing on demo. And I'll probably be, when I go live, I'll let you guys know, but we are very roller coaster on the markets right now, so it can be a little bit chaotic. It's probably not an ideal time to go live when we're seeing moves like this. This wouldn't necessarily be a particularly normal move. Look at that, it's absolutely crazy. So trade safely. I'll speak to you guys tomorrow. I wholeheartedly recommend fxsi.com and their indicators for MetaTrader 4 and 5. It's a 7-day free trial, so do have a look. There's no credit card required. You might be lacking in some sentiment awareness, analysis, and it does complement technical and fundamentals very well. Especially if you're very technical, you could be missing out on some sentiment, or if you're particularly fundamental, you could be missing out on some sentiment. This is like a sweet zone. It complements both, and it gives you a very strong bias about direction as well. So technicals are great for direction, fundamentals are great for direction, but the sentiment sits in between. Okay, and so perhaps if you're missing out on some sentiment awareness, these are the best indicators in existence in the world for that. And then you can have a look at this. You've got a 7-day free trial, and you've got your order book, and you've got your indicators, including the ratios, which are amazing. Just look at my videos on my YouTube channel and you can see how powerful the ratios are. And you can have a look. Just take your time. You've got 7 days to trial them, and if you don't like them, then that's fair enough. You don't have to renew, but we do have a code if you want to, and it's just the QDB code, and it gives you a 10% discount, and that's it. So have a look, see what you think. And like I said, it's a 7-day trial, so you don't have to renew, but I think you'll probably find you will renew afterwards, because the order book and the ratios and the stop loss clusters as well are amazing. The stop loss clusters are great because you know where to target. Okay, so that's where you take profit, where people get stopped out. Okay, and that's it. So just a quick plug for the fxside.com, and enjoy your day.